All right, everybody, thank you for showing up. My name is Nicholas Lau with the Epic Warriors. So today what we're going to do, by popular demand, we're going to learn how to mark up our charts, how to set your entries. And with us today, I have founder 600, Jean-Michel of Quebec, Canada. How are you doing, sir?
Good, you?
Good. Thank you for joining us. I really appreciate you taking time out of your very, very busy day. So what we want to do is basically, for somebody that's been trading for a while, that's, has his own routine, we want to kind of see how you get your day started with your charts, how you mark up, because you do more swing trading than scalping. Is that correct?
Yes.
Okay. So is there two different setups for people that swing and people that do scalp?
I can show you, but I need to show you my screen.
Yeah, so I think you can go ahead and share your screen. So let's get right into it.
Oh, I don't have the option to share
Yeah, so the green button that says share screen. Yeah.
All right, nice. All right, you see my screen right now?
It's coming. Yeah, there you go. All right, everybody can you just drop a 1 in the chat, everybody, if you can see his screen, if you can hear him. All right, we're good. All right, go ahead, sir.
Okay, cool, perfect. What I like to do first is to go on the monthly chart, because I just want to see what's going on there. So right now, what I can see is on GBP and ZD. I will just do like that because it's the bottom, and I will just write monthly.
Monthly, okay.
Because monthly, it's not really important, because we don't have enough liquidity to trade monthly.
Right.
At the end of the day, it's for institution, right?
But you're just setting up your support and resistance, or?
Yeah, because this is the last high.
Okay.
On August, the last high was there. So right now we are on a range of 1,000 pips on GBP and ZD, nothing more. So after that, what I like to do, you see this week? This week was on January. So what I will do, I will just take this and put as a weekly zone. And the last high as the weekly zone was this one. So for me, if we break this zone like that, it will be a buy, right? But again, it's a swing trade, right? So, but right now we need to be careful there, because what the market can do also is they can go there and go there, and now you will lose. So
when you talk about a swing trade, how long is there like an industry standard, or for you, how long is a swing trade?
I like to have maximum 1 to 2 days right now, habitually 3 days, but I don't want to go more than that. We can go more than that. I will show you. But right now, you see, we are on daily, right? What I can observe right now is this. If we break this, I'm looking to buy, but right now we didn't break. So right now we are just at daily. So we are on a sell. And we can also see this. You see?
Okay.
All right. So right now we have a support, break the support, retest, and sell. So now it's a resistance. This is a support, retest, and sell. Didn't break the support. Be careful, because now we are on 1, 2, 3. So a lot of traders will sell right now, and what the market knows, they can push up. And after that, they can come back. So you need to be careful, because it's the third time. So the support can no longer be valid. It can be valid today, And also we have an engulfing pattern just right there.
Right. Okay, can you zoom out a little bit? I just wanted to show everybody something. So um, let's see. Yeah, so go back to where you had that like double, I think you had like a double bottom, right? Before it broke. Zoom out a little bit more. Okay, right there. Okay, so if you all see where he started the rectangle, it went up. So that was the first time, and then it went up, and then it hit the bottom, right? So when it finally breaks through, that's called breaking market structure. Is that correct?
Yep.
Okay. All right. So once it breaks market structure, what used to be the support now becomes the resistance.
Yes.
Okay. And like I said, if anybody has a question, I want you guys to unmute or type it in the box, because it doesn't make sense for him to move on if you're confused about something.
I got a question.
Okay, go ahead.
All right, he said that that a lot of traders would sell, like what the market is now, they would sell, but he said that it's not going to be a sell there. It's going to go through that resistance. Is that what you said?
Yes. Right now you cannot assume what's the market is going to do. Hello?
Yeah.
Yeah, you said you can't assume what the market is going to do. So how would you play it off of that then? I mean,
I
why
will
would you
not play
not?
this right now. I want more confirmation than that, because right now you can assume it's a sell. It's a good risk to reward ratio, but it's really risky, because right now what you can do is you can do like this and just push like this, and it will be a 1-to-2 ratio, right? So it's not enough. It's not a big risk reward ratio. But what you can also do, if you want to be sure it will be a sell, you can put a sell order there, a sell pending, a stop loss there, and you just, and after that you wait for the next to hit the next resistance, the next support. So, but right now we are in daily. We are not in 30 minutes.
Oh yeah, this is the
Oh,
daily.
And I don't like to trade the daily also. That's why. But what I can see also, I can see a trend line, a valid trend line, and we break the trend line right now. So we have a lot of confirmation, but not enough. And also what I want to see on the RSI, I like to put the 50 zone. Just wait a minute.
Yeah.
Sorry.
You had said something about it testing support 3 times.
Yeah. So from what I understand and what I've been taught is that every time that it hits a support or resistance, it's kind of like breaking that barrier, like like cracking some foundation or going through the ceiling. And typically, what happens the third time is when it has the best chance to actually penetrate the market structure. Is that correct or no?
Yeah.
That is okay.
After that, where I go on the 4 hour, because what I know is the market will never do, or rarely will do, one legs. Like you can see, 1, 2, push up, all the time. This one, push up, but it's really rare. This one, go up, and after that, push back down. So the market will always do that.
Okay, so you just look at the daily chart just to kind of get an idea of what's going on, but you never execute on the daily chart.
Exactly. After that, what I will do on the daily, I want to see the last push up on the market. So for me, this is the last push up of the market. This is the last push down on the market. The market goes up and close there. The market goes up. It did a fake out. People are buy. And after that, it go down. It went down. So this is what the market did. So after that, I have that. I know where I am right now. Right now we're on this zone. You see this zone? It's the same stuff again. So after that, I know this is a valid resistance, but not enough. But what you can see right now, you have this and you have this. If you put a sell there, you're gonna win automatically because the risk reward was really high.
But you had said that we wouldn't know what the market was gonna do, right?
Exactly, but right now we have a divergence on the H4 RSI. So we begin to have some stuff, right? We have the proof there, something not matching up. You have the price there, it's higher high. They did an higher high, lower high. So higher low, yeah. So it's go down. So it's not the same thing. So it's a divergence. So you have the proof right now. You are on a divergence trade, but right now you have the moving average 200, and it's going up right now. You see, you have all this information right now.
Cool. So if anybody wants to, explain to the newer people what divergence is, I don't know if Marianne or Malcolm, if you guys want to chime in and explain divergence. Is Marianne there? Or did she walk away? She's unmuted.
I don't know what that is.
Okay. Well, okay. Jean-Michel, go ahead and explain divergence.
It's okay. The divergence is just the price with RSI is not didn't with the price action. It's higher high. Problem, it's not an higher high there.
Right. So there's two things in Forex that are really important. To take a trade, you're looking for confluence, right? But
Yeah.
every once in a while, you'll have what is divergence, where they're actually going opposite of each other. So in this instance, when we have divergence, we're more than likely going to follow the RSI, correct?
Yep.
Okay. So the RSI is the relative strength index. Even though the market's telling you it's going up, it's actually the strength index is telling you, no, it's actually going down. So you should anticipate, that there's going to be a sell.
Yep. And also there, at this
I don't know
point,
what the RSI is either.
Okay.
Is that an indicator?
Yeah, the RSI is the 14 close, and it's an indicator. You go on indicator and you type relative strength index, and you will find the RSI.
Yeah. So.
Okay.
All right. Right now, what I like, I prefer this trade. What I like is something like this. You have this one. It's a good example. You have this one. And after that, the price go up like crazy. But I just want to show you something. It's the H4 color. All right. If you sell there, like just 30 pips stop loss, 25 pips stop loss, and you sell just like this, it's 200 pips, you will make, don't forget, the candle hours is 4 hours, so it's long time. You push like that, you put your stop loss there, you see? And there it's a 1-to-6 ratio, but if you just put there because you're not patient enough, it's a 1-to-4 ratio, just in H4 with not a lot of risk. Why? Because this is an institutional candle right there. What they do, they just push down, and after that they will test this zone. They test again, and after that you see this candle, you can sell you, and after that it's going down, going up, going down. Same thing on the bottom. On the bottom, you see an institutional candle. You have this wick. The market reject this zone on the monthly zone. It's a weekly zone. After that, it going up, rejection, going back up. And
So-
also you have
I think the signal breaking up.
so it's at the
I don't know if it's
28
my
level.
computer or what, but yeah, and anyways, yeah, the signal. But anyways, what I was going to ask you, Jean-Michel, so when you say those institutional candles, that's like where the bank's money is, bank level trading?
Yeah, this is a bank money, smart money. They
Okay, so
going
that's what
up, and
the
after
commercial
that, they will always retest this zone before going back up or down.
Okay.
Yeah. So that's why I really like this zone. This zone in H4, it's like money in the bank, you know. But sometimes you will lose because they know trader know how to trade. So what they will do sometime, you will not win even if you know how to do it, right?
And that is that the market manipulation or?
Yeah. Market manipulation is crazy. They are good at market manipulation. So all right. So now we are on H. No. No. Sorry.
And like this is an open session. If anybody has any questions, if anybody wants to add some input, feel free to unmute yourself. We've been talking about, how to scan the markets on the daily chart, the 4-hour. We saw some divergence. We saw some institutional levels. So we're getting into some chart markup now.
Here we are on H1. I prefer H1 and 30 minutes because the risk is less less stop loss and more fast the win rate rule. We will have the money in the bank, right? Because if you trade daily, you will wait a lot to win. So right now we have a stop loss there. We have a trade there, 1-4, 1-5 ratio. You see? So this is a good trade. And you can just wait. Maybe it will go there, but you don't care. You already made your 1-5 ratio. So you risk 5%, you made 25%. You risk 2%, you made 10% of your account. You're out of the game. It's finished. It's done. The best trader are doing like 10% per month, and they are really happy because with big capital, it's a lot of money, 10%, right? So yeah. So right now you have this and this, you have a disagree with the price. So right now you have also a divergence in H1.
So, okay, so you're saying that, people that are professional traders, they can make 10% a month and do really well because they probably have what, like $100,000 account?
1 million, 2 million, and a lot of institutional prop firm trading will give money where you pass the exam, you do a lot of stuff, but they will give you over 100,000, 1 million, 2 million, 5 million, no problem, because you're a professional trader.
Right. Okay. So when somebody is just starting out, how do they, like when you were starting out or when you, train somebody, how do you get them to build up their capital quickly? Is scalping the only way or no?
Yeah. But for me, to build a capital, you just need to do the math. 5% you risk. I want to make 20% on the trade. So I risk 100. I would like to make 300 or $400. You understand?
Yeah.
So after that, if I lose, I don't care because you can lose 2 trades in a row, even 3. 100 bucks in the bank. After that, you trade, you made another 400 bucks, right? But with the compound interest, the capital will go up really fast. What you need to focus to become a professional trader is just to have your win rate ratio perfectly. So you risk 1, you made 5. You risk 1, you made 10. You risk 1, you made 2. Even 2 is good because if you lose 50% of the time, on 10 trades you lose 5, but if you have a risk of 1 to 2, you're a winner, right? Yeah. So you will build your capital.
Yeah. So it's all about risk management at the end.
Just risk. Traders wants to make money. Professional traders don't care if I lose money. If I win, I don't really care.
Yeah.
What I care is my win rate ratio, how much I made on percentage each week. And what I want to see is how many trades I put on I trade and how many times they hit my stop loss.
Okay. So when somebody is using like the 20 pips and dip indicator, you don't believe that their stop loss should be 20 just because the take profit is 20, because now you don't have the risk reward, right?
You don't have any risk reward. But yes, you can have. If you're good at it, imagine you win 6 trades out of 10. You will make money, but it will be slow, right? Because you made one-on-one ratio.
Okay, we got a couple of questions in the box. Jan had a question. He asked, how do you determine if there's market manipulation? What are you looking for?
Right there. It's a market manipulation. They break the resistance. People, oh yeah, the breakout trader, we're gonna buy, poof, going down, you lose.
Okay, so they make the candle go out of the zone to think it's about to break market structure.
Yeah, because all the people put pending orders for buy stop. So they put the buy stop, they pull the stop loss there. So you have your buy stop there, hit. You have your stop loss there, hit, and they go down.
And that's what we call a fake out?
Yeah.
Okay. So Jan, did that make sense? Is that it's breaking the institutional level and then immediately doing the opposite? Okay, so that's, and the market manipulation.
Where I prefer to trade really right now, it's the London session. Seriously, the London session is better. Even if I see setup like that, I like to wait for 3 hours, 45 in the morning, because this is the time you will see, okay, I'm gonna sell. Oh, the market is doing this. Oh, fuck, I don't sell. Market is doing this. Oh, I'm selling. Everything is good. I can sell right now. I will win really fast because you're on the London session. But if you trade at 5 p.m. or 4 p.m., 3 p.m., maybe you sell there because you see an engulfing pattern and check what they did. You see? So you sell, you put your stop loss there, that's higher high. They hit your stop loss and boom, going down. So at the end, your sell is good. But because they know people will put their stop loss there, they will hit the stop loss, and after that, they will sell.
Okay, and then we have another question. It's like Sandra asked, when you're looking for a divergence, you wait for a candle pattern that is a signal for a reversal before you get in?
Not really. What I want to see, it's this, and after that I will wait for the close of this candle. If I see this close of this candle, I will put my stop loss there. Even if I lose, I don't care. But I will just let the market do what it has to do.
Okay, hey Sandra, if you want, go ahead and unmute yourself if you want a little bit more clarity on that. Otherwise, if you're good, then that's fine. Okay, so the next.
I'm not really understanding how you do the risk reward ratio. Is that something that he could explain to us?
Yep. I'm risking 40 pips. I want to make 1-to-3 ratio to win and to make money. So I'm risking 100 bucks there. I want to make 300 bucks, right? So you have 40 pips, you win 124 pips. You risk 40 pips to make 124 pips. So at the end of the day, but right now, if you took this trade like that, oh, you see, it's a one-on-one ratio. So right now on 10 trade, you need to make money, you need to win 6 trade. Because if you win 5 trade, you're not a good trader because you're just doing break even. And that's the reason why a lot of traders right now is doing, and they are all losing their money, is because they are doing break even all the time. They didn't calculate anything like that. They didn't calculate, okay, let's see. If I'm gonna take this trade, and I can put the setup is there. I want to make money right now. I put my order there. I'm going to sell. I know already. And I know my target will be there, there, or there, something like that, right? So right now, I'm risking 43 pips, 1 ratio to make 12 ratio. You have there, 12 ratio. So if you win, you're making a lot of money. But even there, I'm making a lot of money. I'm making 1 ratio to 5. So if I lose 4 trades after that, I'm making money. I'm not a break-even trader. I'm a winner trader because I'm always making money, not losing money. Even if I lose trade today, I don't care because maybe tomorrow I will make a 1-to-5 ratio. So at the end, my account will grow. And what you want to do is to grow your account.
Okay, so
even if you have $1,000 or $100, you just want to grow your account and make 5% risk or 2% risk per trade, right?
you have a daily goal as well. Like last night when we're on the webinar with the Australian team, her goal was about 5% a day. After she makes 5%, she's done.
Exactly.
Same? Okay.
If you risk 5, you want to make 10%, right?
Okay. But if your
Okay,
goal,
so how do you,
no,
so like, okay, so what about when you set your stop loss? Like, well, because I'm learning to do scalping. So how do you avoid setting your stop loss too far back as far or not or up too close, and then you get stopped out because like you're just looking at, oh, I want to risk 5 pips to make 10 or 10 pips to make 20, but then you get stopped out because you only risk 5 pips and it wicked you out, or you only risk 10 pips. How do you avoid that?
is his camera?
Did I lose him?
I think his looks like his camera froze. I told you don't ask such tough questions, Steve. Freezing people's cameras. Is everybody frozen or is it?
I'm not frozen. Can you see me?
Yeah.
Okay. There you are. I don't know what happened. I don't know if it's my computer. Do you think it's yours or mine? That sucks.
He keeps freezing. Looks like.
No, the connection is really unstable right now.
Oh, it is? It's your
cutting it out.
That's a Canadian problem that we're going to have to resolve.
And we have a big problem because all the time the internet can stop all the time right now.
All right. So, okay. So I guess what Dee was asking is if she sets her like take profit for 15, but her stop loss for 5, it's like, aren't you going to hit stop loss more often than not?
Yeah.
So how do you get around that?
I will not stop with five pips my stop loss. It's too short.
Oh, okay. So you're always looking for a bigger, like 20 to 60.
20, 40,
Okay.
minimum 40, 20, 25. If I want to risk, maybe 25. But you know, institutional trader are always, their stop loss is like 100 pips. So if institutional trader is 100 pips, why I'm going for a setup for 5 pips, right?
So, okay. So
It's
Marianne,
gambling at the end if you do.
You talking about on a stop on a? Okay. So what I had said while you had your thing went out, I was saying that I'm learning to scalp. So you're saying that if you were scalping, you would set your stop loss at 100 pips?
Wait, I will show you. I understand you want to learn to scalp, but right now I'm just doing the markup. All right, right now we're on the 30 minutes time frame, right?
well, while you're doing that, and Marianne, when you use 20 pips in dip and you set your stop loss and take profit for 20, what would you say the ratio is winning to losing?
Off the top of my head, I don't know. sometimes I actually just get out when I see it going down, or I'll move my stop loss. But it hits take profit. Yeah, the 1-to-1 thing to me doesn't make sense either. Yeah, so I'm not gonna. I don't do 1-to-1 anymore. So,
What do you do, Marianne?
well, I do. What do I set my? I do 1 to 1.5.
Okay, okay, I see what you're saying.
That's what Damon showed that on a video that I just watched. And then he does set this like Jean-Michel's doing here with the stop loss right above, either above or below the last high or low, right?
Okay, okay, okay.
Yeah, I had Jean, I had a similar concern with that because so I have a trading plan. It is important that you would agree that it is important for everybody to have a trading plan, regardless of whether they're scalping or what pairs there are. I do have an actual trading plan, the document, and I want to be consistent with that. So in my trading plan, I'm focused on 3 pairs: Euro USD, GBP USD, USD CAD. Those are my 3 pairs. I trade during the New York session in the morning, Eastern time, and I'm committed to trading Tuesday, Wednesday, Thursday, because those are the days where you have the most volatility. I take my goal for those days. I didn't find any setups today, but if I do find a setup, I get my 20 pips. I'm done trading for that day, ideally before noon. So I think so. What I'm hearing you say basically is that even if I'm just going for 20 pips, do at least 2-to-1 or 1-to-2 ratio, meaning go for 20 pips, risking 10. So if you have a smaller stop loss, you might technically lose more trades. But in the end of the day, what matters is you want to be a profitable trader. The majority of people who trade are not profitable. That's why they get frustrated and they quit. So if I'm trading Tuesday, Wednesday, Thursday, I might lose 1 on Tuesday, win 1 Wednesday, maybe lose 1 Thursday. But if I'm doing everything correctly, having the risk management that you're saying, I could still technically end up with a profit. And then as I gradually increase my balance, you're going to start noticing bigger profits. So, isn't there a way to have, and as you would grow, you would get more experience and you get better and better at this. Can you have it both ways? Can you have an 80% winning ratio and still have that 1-to-2 risk reward? I mean, can you have it both ways, or does it really not matter that much?
For the risk ratio, you can have 80% win ratio, but you need to know the best traders in the world are not at this level for 80% win. Consistently, it's really hard to gain 80% ratio. You need to be really patient, have the best setup as possible. But what I want me is to make money, and the only way I find on myself to make money is to have a risk ratio. So I'm risking, by example, 20 pips at least. I want to go out with 60 pips. At 60 pips, 1, 2, 3, I'm done. I'm done, finish.
Okay, so Jan, this actually brings up a good point because in the Lion's Den signals, there was a signal yesterday and the stop loss was only 7 pips, right? And I'm thinking it's got to be a typo or something. So my dumbass still puts 20 pips as the stop loss. And of course, it hits the 7 pip stop loss. So they were taking a chance because they said, if this doesn't hit the stop loss, it's going to be a big payout. But if it does, we're going to get out with just minimal damage. Aside from me, because I lost 20 pips on that trade. But now I see why they do it. It's like, we're going to take a chance here. If we lose, we're only going to lose a little bit. But if we win, we're going to win big.
I think I'm kind of understanding now because for me, this is one of those things where like if you've already done some trades, like so far for me, it's kind of been a mixed bag. I've been doing 1-to-1 risk management. It is important, a lot of people don't do any risk management, and that's a much bigger problem. I actually calculate. Yeah, I actually calculate my lot size. It's not like I just go in blindly. Like I actually know what I'm doing. even though I'm learning. But in any case, I think I kind of understand now, because when you think about it, so like if you've been on a live session with Josh Rosario, or maybe some other trader, they don't necessarily always wait for it to hit the stop loss. Sometimes they just pay attention. They're looking at the chart, they're looking at the candles, and they're like, okay, guys, they're like, you guys can stay in the trade if you want. I'm going to go ahead and get out because it's not doing what I thought it was doing. And if it reverses and does what they were supposed to do, well, then that's just part of being a trader and saying, you know what? It's better to know where your losses. Like me, for example, this all comes down to discipline, guys. This comes down to you being disciplined and not getting emotional or frustrated, because you got to see the bigger picture. Earlier this week, I saw a W pattern. I think it was back on Tuesday. I saw a W pattern starting to form, and I was like, okay, this is not going to move the direction I thought. I went ahead and cut my losses. I lost like 4 or 5 pips. I got out the trade. Later in the day, I saw that it was going to keep going up and up. And I was like, look at that. I lost $20. Less than $20. It's better to lose 20 bucks than 80 bucks. So this comes down to the discipline, knowing when to cut your losses. Even if you're wrong, you know, what matters is being right more than you're wrong. So I think what Jean is getting at is looking at the big picture. You know, don't get emotional. You know, it's better to, you know, get a small profit than to lose money. And if you don't find any good setups, you know, then whatever. It's better to not make anything, make $0 than lose $50. You know, look at the big picture.
Yeah, absolutely. Hey, Shalisa, can you unmute yourself for a second? I just want to make sure.
Yeah, you have a big example there. You see, you have an M pattern. M, but the institutional trader always know that. They push up, they hit all the stop loss. This is the stop loss zone, you see. After they hit the stop loss zone, what they do, push that back down. But we don't care about this zone. We don't want to sell, even if they do this, we don't want to sell. Also, what you want to see is what time it is. It's really important because right now you see at 8 a.m. there, I know it's a session. So because it's a session, you're going for a sell, right? But there, you're going for a sell, right? You put your, what I like to do right now is I put pending limits because you see you have this, I just put a pending limits there. And boom, going back up. Oops, I don't have a trade.
Yeah, me, like, I love using buy and sell limits.
Yep.
I haven't really had a success with market execution. You know, like for me, it would make it, like on the surface, it would make sense, like, you know, because you're scalping by definition is a little bit quicker. But honestly, I love using buy and sell limits. If you're using, I've had more success with that. If I like to put them at my key levels, if your trades are working out with your buy and sell limits, that means that you have a good understanding of market structure. That means your key levels are accurate. That's going to help you be more confident. That's going to help you be more patient. So that's I'm all about market structure.
Absolutely.
And I'm out of a trade by noon.
When you do your
No, that's fine. I just wanted to get Shalisa's question because I wanted to talk about that risk assessment. What were you saying?
Oh, actually, mine wasn't a question. It seemed like someone was confused on what Jean was saying, and I was.
Okay, so what was your viewpoint on it? I just, because not everybody's.
Oh, I'm sorry. Did I put that in the?
No, it was in the chat box, but I'm
okay.
saying not everybody's looking at the chat box because they're probably full screen right now.
Oh, I see. So, you know, one comment was, you know, just to be right more than you were wrong. But what I think Jean was trying to say, correct me if I'm saying your name improperly.
Oh,
Jean, thank you. What Jean was trying to portray was that with the correct risk ratio, you could be wrong, you know, 10 times and only right 5 and still make a profit with the correct risk management and risk ratio.
All right, I'm there. Sorry, the connection is really bad today.
Oh, really? You didn't? Yeah, then it's definitely on your side because we all got.
Yeah.
Yeah, it's on my side. I know all day long today and yesterday, like every 1 hour, maybe I lose 10 times the connection, you know?
Oh, that's not good when you're trading.
Right.
Oh, but have my phone.
Yeah, that's why it's good to have the phone to get you in and
I
out.
have my phone connection, so I don't care.
Yeah,
And then it sounded like a few people were understanding the risk ratio as his win rate and asking, like, can you do both? Can you win 80% but still have a 1-to-2 risk ratio? But I was just trying to emphasize that risk ratio is not a win rate. It's just your risk assessment for that individual trade.
It's just mathematics. If you win 80% of the time, you will make money, even if you are doing 1-to-1 ratio. But professional trader, this is not how they trade. What they trade is they want to make a win rate ratio also.
Okay, very cool.
But you can make 1-to-1 ratio if you win 80% of the time. But you understand you need to win at least 6 times of 10. Because if you don't win 6 times of 10, you're not a pro. You will lose money at the end, right? You will make a lot of action, but at the end of the day, you will not make money. So you will just spend time on a computer without money.
Cool. So we got about 12 minutes left. Does anybody have any questions or want to see anything in this time? So if you do, just, let Jean-Michel know. We can look at it. And hopefully you guys are enjoying this. Is this something you guys want to do more regularly, or I hope it's helping. I mean, it's helping me a great deal because I just realized,
Absolutely.
I realized I risk way too much on my trades. And that's why, so many days I'm red and not blue because I don't cut my losses when I should.
That's true. I mean, me too. I agree with you.
So, Marianne, when I was looking at Andrew's trades today, he's just pretty much scalping the market. $1 here, $2 there. He's like, I don't care. He's like, I'm not losing money. It's like, I don't even, because he has a trailing stop loss, right? So he's like,
Right.
the worst that's going to happen is I'm going to win a little bit. But all of those little things, it'll add up to one big win rather than, take a chance and, lose one big trade.
Right. I mean, everybody's different, right? So it's just on how whatever works for him and whatever works for us.
That's the great thing about Forex trading. Everybody can develop their own strategies. It's like, it's very diverse, which is very.
So I actually have a question, John. When you were talking about your ratio, your risk ratio, when you did 20 pip stop loss and like a 60 pip take profit, do you split that up into like 20, like 3 TPs and do like 20 pips each, or do you do one for like 60 pips?
One for 60 pips, and
Okay.
after that, if maybe I will have 1-to-2 ratio, I win, and I don't see the market is going on my direction, I will maybe cut half of my profit, or I will cut everything. I will just finish the trade.
Okay.
Because I want to win more than I lose, so that's the reason, and I want to make good risk reward. So that's why maybe I think it will go down like that. It's a good resistance, or boom, it's going up. It's a support finally, you see? But there you have a resistance. We are on the 30 minutes time frame right now, and you can see resistance. Oh, boom. So what they did, they break the resistance, going up, retest, you can buy, and boom, going up. After that, people go to sell, they go up. So you need to be careful, and you need to check also the time you're trading, just to make sure they will not do a fake off. And what they like to do all the time, it's at 3 a.m. on the morning. It's a beautiful sell. I'm selling, I'm putting my stop loss, and boom, going up for 30 minutes. And after that, they go back down all the time.
So Jean-Michel, Sandra had a question. Do you set a trailing stop loss when you're trying to get that many pips?
Trading stops?
Yeah.
I don't really like trading stop, but yeah, I can use trading stop, but I don't really like, because I know my risk reward ratio. But trading stop is for the trader who wants to scalp and make money really fast, right? Yeah. So you put the trade, and after that you put your trading at 10 pips, 20 pips, and the trading, it's just putting the stop loss, moving more. But I prefer to trade by zone, because when I do a trade.
So when you trade by zones, is that considered institutional trading?
Yeah.
Yeah, okay.
Okay.
Okay, so let's see here.
Not the best example there, but
What exactly are we looking at now?
Fibonacci 62%. They hit the 62%. You take the trade there. You buy there, and you put your take profit there. At the zero of Fibonacci, you made 287, and you have a good risk reward ratio. But I don't really like this setup. But yeah, you put a buy order buy limit there. You put your at 79%. This is your
Okay, so for people that are not familiar with Fibonacci, I guess it's kind of like a ruler for your chart that shows you the most profitable zones, or
yeah. Yeah, just to see if it's add up with what we think. This is what we want to know, to see. It's do we have a setup, right? Like right now we're on the 30 minutes, and what I can see, but I'm not sure because nobody can be sure until we see the trade. But right now, what I guess, but I'm really not sure. It's the market can do this, and do this because you assume it will go back down because we have a resistance there. So what they can do, the market, this is the level. So right now it will be a buy. People
oh, there goes your connection again.
Lost him again.
It's okay, we can improvise. And that's what that's all about.
Nick, you explain it.
I'm not good enough at this to explain, but I see everything.
I mean, not either. That's why I was joking.
Isn't it cool though? It's like now that I see the big picture, I see what I'm doing wrong now.
people buy there. You see, people is buying there. So what they will do, they want to kill you. So how they will kill people? They're going down. Now people, oh my God, my account is really high risk because all the bad trader, they're just doing over average account. So they will just blow their account, right? So at the end of the day, what they are doing, boom, boom. Now people, oh, maybe I will take I will make a lot of money tonight. Going back up. Ah, you see, I'm right. I'm adding another position. So maybe I will make more money because, if I'm buying there and they go up there, I'm making money. So I will recover my loss. And after that, we will make money. But what the market wants you to do, it's exactly this. So you will buy there, Fibonacci 71% or 62, I don't know. If I see an M pattern there at 3:45 in the morning and going back down, I'm selling this market, period. If I see an M pattern, 2 legs, and after that, I'm selling this market because I know they will reach this level. So I'm risking this for this.
So that actually brings me to another point. Maybe on our next session, we could look at the different formations, the M's, the W's, the head and shoulders and all that, because I think it'll make more, clear sense when we do that.
Yeah, of course.
Okay, so one of my last questions is, if you're an institutional trader, is it easier to scalp or vice versa, or are they just completely different? Like, does one help you do the other or no?
You need to have no, not really. It's more what you want to do. What is your risk ratio? If you want to scalp, it's not a problem. We will go on a 5-minute time frame. We will find more volatility and we will use moving average 20, 45, 55. And we are not gonna, if we see 20 is it's on the buy area, I can show you fast. All right. Nah.
I think if you put moving average instead of EMA, just type in moving average.
Nah.
Is it?
Can I change this one? I don't know. I can input. Oh yes, cool. 20, 45, 55. All right. You need to make some hypothetical transaction, right? So right now you want to make 1-to-2 ratio. You buy there, your stop loss is there, 11 pips, and you get out there. Or you can 1-to-3 ratio. It's the same 1-to-3 ratio, so you're risking 11 pips for 35 pips. But it's a moving average. You don't want to sell or to buy. Like, it's not a good idea right now to sell. Why? Because all the moving average is acting like a support or a resistance. So this is a resistance, this is a support, this is a support, this is a support. But because they
Gonna file a formal protest with Canada after
That damn Canadian internet.
Oh well, that's fine. Oh, well, I gotta wrap up anyways. I got a ambassador call in 2 minutes.
Yeah, we're coming up on an hour anyway, so.
I know. Look,
So I just said, oh man, I wanted to hear that.
I know. Well, let me see if he unfreezes real quick. Well, okay, everybody, if you could do me a favor and just, give Jean-Michel a quick shout out in the group and just thank him. And then if you have any questions, you can put it in there as well. So, hey, Jean-Michel, I actually have another call coming up. Actually, if you guys want to hang out with him for a little bit, I can make, well, see, I don't know if that's going to hurt the recording. I don't want to lose the recording. So why don't we just do this again, maybe next week or something? Would that be okay with you, Jean-Michel? Do you have some time next week? Actually, he can't talk anyways. We'll just assume he has time next week.
all right, I'm done. Bye.
I'm done.
He's like, okay. All right, I got to jump on the other call, but thank you everybody for coming.
Thank you.
Thanks,
Please,
everyone.
quick shout out in the Team Momentum group, and we'll do this maybe again next week. Okay.
Thank
Yeah,
you.
pleasure. Bye-bye.
All right, thanks.
Bye.
Have a nice day.
Bye.
Bye.